Did you know that Gary Black sees a potential for Tesla stock to go 7x? Black is one of those who remain bullish on Tesla despite numerous issues faced by the company. Black believes that this has to happen in order for Tesla stock to soar. Keep watching if you don't want to miss this info. In a tweet, Gary Black shared his thoughts about Ron Barron's $4.5 trillion valuation for Tesla by the end of the decade. Ron Barron's $4.5 trillion Tesla valuation over the next decade is quite realistic. He assumes 20 million cars at $50K ASP at 30% operating margin equaling $300 billion operating income times 15x EVOI equals $4.5 trillion. That excludes robotaxi, bots, batteries, everything except EVs. American mutual fund manager and investor Ron Barron believes that Tesla shares could rise 570% over the next decade to a $4.5 trillion valuation. Renowned investor Ron Barron of Barron Capital remains bullish on Tesla. In November, he told CNBC that he expects Tesla to turn in huge gains that will eventually lead to a company valuation of around $4.5 trillion, up 570% from current levels. Barron is a long-time investor in Tesla, first acquiring a stake in the company in 2014. He has a combined stake in Tesla worth about $4 billion. The investor believes that in 2025, the company's shares will be worth around $500 to $600 each, and in 8 to 10 years, the total value of the company will be about $4.5 trillion. The investor agrees with Elon Musk's comments during the Q3 2022 earnings call that Tesla could be bigger than Apple and Saudi Aramco combined, implying a valuation of over $4 trillion. The calculations behind Barron's bullish target are based on Tesla significantly expanding its business over the next decade, selling about 20 million vehicles a year. He also commented on Tesla CEO Elon Musk's goal to produce 20 million vehicles annually by 2030. In 2030, if he does 20 million cars per year and they're $50,000 a car, that's $1 trillion in revenues. And he gets operating profits at somewhere around 30%. Barron explained, adding a 15x multiple on those $300 billion in operating profits gets you to $4.5 trillion. The investor emphasizes that the bullish case outlined solely by the contribution from Tesla vehicles to revenue does not include other impressively profitable areas that the company is working on right now. Areas such as autonomous cars, robots, and batteries definitely offer a margin of safety for his investment. But that's not including robots, that's not including autonomous vehicles, that's not including batteries. He thinks robots are going to be bigger than cars. So there's so many things happening at Tesla, it's hard to keep up. Barron explained. It can be noted that when Musk made the comment that Tesla will eventually be worth more than Apple and Saudi Aramco combined, he emphasized that the humanoid robot is not even taken into consideration. This implies that Musk has very high expectations for the humanoid robot, and Tesla's valuation may even be higher if it was indeed included. Through a tweet, Gary Black expressed agreement with Ron Barron's Tesla valuation. Barron's Tesla valuation of $4.5 trillion in a decade is in line with mine by 2030, although we come at it in different ways, Black said. He further explained that he projects 10.6 million Tesla EVs will produce 2030 EPS of $42, assuming a 30x PE in 2030, 2x future EPS growth of 15% CGR, which equates to $1,260 a share valuation of around $4.5 trillion. However, Black, like the majority of Tesla investors, voiced concern over Elon Musk's focus on Twitter. A growing number of Tesla individual investors are expressing their misgivings that Chief Executive Elon Musk's involvement with Twitter Inc. may be to the detriment of the electric vehicle maker, with the car company's stock on track for its worst full-year performance. There is no Tesla CEO today. Gary Black, managing partner of the Future Fund LLC, which owns roughly $50 million worth of Tesla, tweeted. Black expressed his frustration after another sharp sell-off in Tesla stock. Shares in the world's largest car company by market value fell by more than 6% in mid-December. This is following a tumultuous weekend for Musk on Twitter when the billionaire took aim at the company's former head of trust and safety and called for the prosecution of top U.S. government medical advisor Anthony Fauci, as well as criticized people who offered their pronouns without being asked. Black said, The market voted today that the Tesla brand has been negatively impacted by the Twitter drama, where before EV buyers were proud to drive their Teslas to their friends or show off Teslas in their driveways. Now the Twitter controversy is hurting Tesla's brand equity. Black notably quoted Warren Buffett, an American business magnate, investor, and philanthropist, and currently the chairman and CEO of Berkshire Hathaway. Black said in a tweet, "As Warren Buffett famously said, in the short run the market is a voting machine, but in the long run it's a weighing machine. We don't believe the Tesla brand has been impaired, but improved Tesla communications are clearly needed." Black then tagged the Tesla executives, CEO Elon Musk, head of investor relations Martin Vicha, and member of the board Hiromichi Mizuno. Ross Gerber, a longtime backer of Tesla, tweeted a question directed at Tesla's board of directors. Who is running Tesla day-to-day during this critical time for the company? Gerber said. In another tweet, Gerber said, "There's nothing wrong at Tesla at all. Other than the CEO working at another company, certainly Tesla deserves a focused CEO. It would be helpful to know what Elon's plans are." Tesla shares are down more than 54.31% this year, putting it on pace for its worst year on record. The only other year where the shares fell was in 2016 when Tesla stock ended down 10.97%. Notably, Musk's Twitter takeover has raised anxiety among Tesla backers for months. Several urged the Tesla CEO to abandon the deal and focus on the EV maker when shares were already down around 30%. The stock has declined further in ensuing months amid growing recession concerns and cost pressure from high inflation. Tesla also has scaled back vehicle delivery plans. Tesla stock has fallen about 28% since the Twitter deal closed in late October through December 13th, when it ended trading at its lowest level in more than 2 years. On the same day, Musk tweeted, "Tesla will be great long-term but doesn't control macroeconomic tides." He later added, "I will make sure Tesla shareholders benefit from Twitter long-term." However, he did not disclose any plans, much to investors' dismay. In the week prior, Musk said he continues to work on Tesla as well as SpaceX, formerly known as Space Exploration Technologies Corporation. "I continue to oversee both Tesla and SpaceX, but the teams there are so good that often little is needed from me," he tweeted on the weekend. In a July tweet, Black said, "My 2030 Tesla EPS forecast is $120. I attach a 2030 PE of 30x consistent with a 15% volume and earnings growth from 2030 on. That's equal to a 2030 PT of $3,600. Discounting that back at 13.1% assumes a 3.5% 10-year TY to the present equals $1,400. At the time, Tesla stock was trading at around $232 per share. However, note that this prediction was made before Tesla split its stock in August. Still, it makes sense as the EV company's stock is trading almost at the same level today as it did then, although it is considerably lower from $232 in July, as it is currently trading below $200. Black believes that Tesla stock is too cheap and that it should start buying back its own shares. Tesla bull and institutional investor Gary Black has said it is the right time for the company to perform a buyback, as its price-to-earnings ratio is the lowest it's been since COVID. Black sent a letter to the Tesla board of directors with a recommendation on how to spend some of the company's growing cash hoard. He wants them to buy back Tesla stock, as share buybacks can boost any stock. After all, a company is just another buyer of shares, and when there are more buyers than sellers, stock prices rise. Black suggests that Tesla's board could authorize a $10 billion share buyback program and use the $5 billion to buy back shares immediately from CEO Elon Musk. It would solve the dual purpose of helping Musk finance Twitter, as well as reduce the overhang on purchases and Tesla shares and improve earnings per share. Upon receiving criticism from Twitterati for his proposal, Black further explained that the buyback should be proposed in 3 years. Black said a $10 billion buyback won't hurt the company, with earnings expected to generate $18.9 billion in cash and $100 billion in free cash flow over the next 3 years. His assumption also includes all of the CapEx cost, including $35 billion for new Gigas, Optimus, Dojo, robotaxis, and other initiatives. Black also shared an open letter he wrote to Tesla's board giving his suggestions. According to the letter, Tesla is the future fund's largest holding, and the company has full confidence in Tesla's products, strategies, and management team. Subscribe to this channel and have a great time watching.